Welcome to the newest installment of Revenue Stream with RMS. Today in our series, we've invited a global panel of RMS experts to discuss what's on the mind of every business, every consumer, in nearly every developed country: inflation. We'll discuss the state of the markets in the UK, Europe, and Asia, how restaurants are responding to inflationary pressures, and what RMS learned from surveying more than 2,500 consumers in the US, UK, Italy, France, Germany, Spain, and Japan. Our experts today are Philipp Laqué, the EMEA Director for RMS, Masato Yano, who's RMS's Tokyo Director, and Francois Acerra, the US-based Director of Research and Consumer Analytics. Thanks for joining us, guys.
Thank you, Tracy.
Thanks for having me.
So let's start at a high level. How are consumers feeling about restaurants in today's environment with labor shortages, higher prices, and overall economic volatility? Francois, why don't you start us off? How are Americans feeling?
Americans are not feeling great about restaurant. I don't think the restaurant sentiment is at its highest right now. About 50% of consumers report the restaurant industry to be worse off than last year. Almost 40% of consumers report getting less value from restaurants. And as you mentioned, it's primarily driven by higher prices, inflation, as well as shrinkflation, so paying higher prices to get smaller portions. We also recorded quite a few complaints around lower food quality at restaurants, as well as lower levels of service from the staff, so more related to labor shortages in that case.
I mean, Japan is a little better than the US. 40% of customers, or 2 out of 5, believe the restaurant industry is worse off today versus in 2021. And yet, 88% report spending more or the same of the disposable income of restaurants compared to last year. And almost all respondents believe they're getting more or the same value from restaurants today as they were in 2021. I think this is partly because COVID restrictions are starting to get lifted gradually. Even though inflation is unprecedented, consumers gradually are coming back to restaurants. The additional result supporting that is that Tokyo diners continue to spend. 9 in 10 guests reported at least one weekly dining visit in the last month, with fast food seeing the most significant increase in frequency.
Yeah. Philipp, how about in your markets?
So Europe is a bit of a split picture. Let's start with the UK and just take a look in terms of how the consumers think the restaurant industry is actually doing over here. And in the UK, almost 1 in 2 consumers believe that the industry is worse off today than it was in 2021. And this is due to the wide coverage in media where consumers are aware of the big issues, cost inflation, as well as labor shortage that are impacting the industry. Now, if you move to the continent, to the other European markets, consumer perception of the industry is a bit more optimistic. For example, in France and in Spain, we see that 44% of consumers see the industry as better off versus 2021, while only about 30% think the industry is worse off.
So that's interesting. How is perception playing out in these respective markets? So, for instance, in Europe, Philipp, the general optimism, is that translating to stronger traffic and sales? And vice versa, in the UK, general pessimism, is that dampening traffic and revenue?
So let's start in the UK. 43% of those consumers that we surveyed reported that they're spending less of their disposable income on restaurants compared to last year. So we see that trade down and trade out are real here. 40% choose less expensive restaurants, and 2 in 5 are trading down to less costly items or ordering less. Now, while the continent was more optimistic towards how the restaurant industry is doing overall, the consumers themselves are still in favor of trading down. If you're looking at Italy and Germany, 2 in 5 are trading down, and just over a third, 32 and 33% respectively, report spending less. So we are seeing this trade out and trade down behavior across the whole of Europe.
So you mentioned trading down. Are either on the continent or in the UK? I mean, are you also seeing trading out in terms of slower traffic?
We're starting to see traffic slow down, specifically in the full service segments. So table service segments, sit down restaurants. They are doing little worse than QSR. So we're following the chain, right? So we're trading down from full service into QSR. We will also see some trade out of QSR into supermarket shelves. But let's not forget that all of the supermarkets have very much increased their convenience range. So quality has improved in the supermarket shelves. And it's still much more affordable than just going into a QSR restaurant.
Interesting. And getting off topic slightly, but I know in the US, I'm shocked every time I walk into a supermarket. But you're not. People are still choosing the supermarket versus or food at home versus food away from home. Generally, at that kind of lower level.
I wouldn't say that they're choosing supermarkets as in general over QSR restaurants. What we're seeing here is a cost of living crisis. Yeah. People need to make the decision whether they heat their home or they eat. Quote some of the headlines from some of the recent headlines. So with less money to spend, with less disposable incomes, consumers face challenging decisions.
Yeah.
They need to do both, right? You would want a warm home and you need to feed your family, right? So the question is, how can you make ends meet? And there, I think supermarkets, specifically for the lower income consumer bracket, is offering out, right? They can still create an occasion at home by buying something slightly nicer, prepared in a supermarket, than just taking the family to a restaurant. So I think there's going to be a bit of competition coming up on that end from the lower income brackets.
Interesting. So Francois, what are we seeing in the U.S.? Trade out, trade down, a little bit of both?
I think a little bit of both. When we look at traffic trends year over year, we're still seeing negative numbers. In the quick service restaurant industry, it's right around 4 to 5% traffic decline. And we see also a lot of trade down. So similar to what Philipp just mentioned, we see about a third to 40% of consumers trading down, so choosing less expensive restaurants overall. So I would say in terms of traffic trend, it's very comparable to Europe.
Interesting. Masato, what's happening in Tokyo?
Dining remains strong, as I mentioned. Though 25 consumers reported they visited full service less than in the past month. Another thing that in a survey that jumped out to me is the off-premise channels are slowing slightly, with the respondents reporting less weekly frequency.
That's interesting. And from what I'm seeing, off-premise seems to be declining across the board. Philipp, we talked a little bit about grocery. What is the survey saying about off-premise?
So, well, for one, we see, as I've just mentioned, that in the UK, quick service saw the most significant increase in frequency overall. And then if we're looking at the rest of the segments, 2 in 5 reported visiting fast casual as well as full service less in the past month. And we can anticipate that a decrease in off-premise will happen. So when we're looking at the survey respondents, only 20% plan on dining out more, and 1 in 3 specifically state they plan to cut off off-premise occasions, mostly delivery. So that's in the UK. If we're now moving, for example, to Germany onto the continent, we see a similar picture. QSR has done the best in terms of the overall restaurant segments, with lower declines and frequency actually going a little bit up based on the survey results. But again, also in Germany, 1 in 3 Germans that we surveyed plan on using off-premise less than they have done in the past. So there is a bit of a tendency to cut the unnecessary spending.
Yeah. I know in the U.S. in the past we've done, how price or what's causing price sensitivity. You mentioned delivery, Philipp. Is some of that just the surcharges on delivery?
So some of that might be driven by the surcharges in delivery. But when you're talking about sensitivity, I would take a step back and not only look at it from a delivery perspective. So let's just put ourselves in the shoes of the consumers. They see negative headline after negative headline. Even consumers that are very well off are suddenly finding themselves in a position where they feel they need to save in some way or another, some form or another. So it's a halo effect that is not only happening at the lower income bracket, where, as I mentioned, over here there is a real cost of living crisis happening, families not knowing how to survive on current income levels. But that news and that negative sentiment that triggers right up to the top, where people don't struggle whether they heat or they eat, they might need to cut down on luxurious vacations or these sort of things. But even there, consumers feel that they need to make savings, so that they're going to cut off on some of the discretionary expenses. It's all psychological.
Yeah. So delivery surcharges are the least of their worries, in other words.
Well, that's one of these luxurious expenditures that you might say, okay, I'm getting away with, right? So maybe, right? You're just saying, okay, let's not order in. Let's have the supermarket pizza as mentioned earlier on, or let's just go and pick it up, or let's make a proper occasion out of it and actually eat at the restaurant and have, celebrate the moment.
Sure. If we're going to splurge, let's splurge.
Correct.
Yeah,
Correct.
That makes sense.
The interesting thing is that the situation is quite different in Tokyo. Most respondents stuck to their habits across segments. And as I mentioned before, the fast food saw the greatest increase in frequency, while 2 in 5 reported visiting full service less in the past month. So I think Japan is a little bit behind on what's happening right now. I don't know how it's going to change in the near future. But at this moment, at least for now, what I'm seeing is a little bit different than Tokyo is a little bit different than other countries.
Yeah, is Japan as negatively affected by the war in Ukraine and all of the oil and gas issues?
Definitely, absolutely. We're seeing significant increase in, let's say, food prices. Basically, the price of the grocery store are definitely increasing. But I think I would say interesting, but I think it's coming from like our mindset that Japan has been deflationary country for so many years so if you look at the producer price index, it's up almost about very close to like 10%, like 8%, 9%, 7%, around that range. But if you look at the CPI, consumer price index, it's up only by 2%. I think what's reflected on this is that the companies are very hesitant to increase price because Japan has been so many deflationary country for so many years. The wages are not increasing. So companies are very concerned that the consumers are very price sensitive. They're afraid of losing consumers.
Sure. So just maybe walking more slowly or more carefully. Francois, I don't want to put words in your mouth, but I mean, what was the last consumer impact report? 16.9% average price increases year over year.
Yeah, our
the
latest.
U.S. is not walking as cautiously.
No, I think there's definitely been an appetite to take price in the U.S., and that's really driven by increased cost pressures, not just on the commodity side, not just on the food supply side, but also on the labor side. So U.S. restaurants, U.S. Restaurant brands have not been as shy in taking price. Almost reached are well into double-digit increase over the last year now.
Yeah, that was going to be my next question for you, Philip, in terms of pricing. What are you seeing in the UK and Europe as it relates to how consumers are reacting to higher prices?
So let me just add one thing on to Francois. He mentioned that the US has taken quite a large amount of inflation. The US has started much earlier on that track record than Europe. So while we have seen restaurant companies starting to take this to put up prices in H2 literally last year, Europe has been hit since pretty much beginning of this year. So we are lagging behind a little bit on that development versus the US. Now, if you're looking at what the consumers currently say and how they feel about it, looking at the survey again, let's start with the UK. 60% of those consumers surveyed feel that restaurant prices are higher compared to last year. Now, in the UK, we need to keep in mind that we had the VAT rate change. So the VAT rolled back to 20% in April after it was lowered to first 5% and then 12.5% during COVID. So there's a bit of an impact there as well. Now, when we looked at justifiable reasons for price increases, so we asked those questions in conjunction, the positive side for the industry is that 72% of consumers believe that increased food costs are justifiable reasons for restaurants to increase prices.
But as you were saying earlier, if they have a choice between going down to the local restaurant and keeping the heat on.
So that's exactly the critical question that the continent or the Europe is now facing. We've seen a similar, Francois, correct me, but if I'm looking at the numbers, I think we've seen a similar trend in the US where consumers were actually walking along with price increases quite nicely, and pretty much until the end of last year for about half a year, let's say. And then we've started to see a decrease in traffic and transactions. And so those price increases absolutely don't flow through as much as they have in the past. So to your point, Tracy, the real test of consumer resilience of pricing will come in Q3 and Q4 of this year in Europe. Let's not forget that we are lagging behind the US and we've just started that. We also had the first summer of unrestricted travel again in Europe. So a lot of consumers did actually make use of this for vacation. So for all non-Europeans, the Europeans love their beach vacations in summer, right? So you go away and incidentally, spending behavior changes, right? You become less price sensitive, this sort of thing, right? And then to the point, now we are coming back from vacation, heating gets on, energy costs are through the roof, so the real stress test in terms of consumer resilience will be seen in Q3 and Q4 of this year.
Yeah. I contributed to the European travel dollar, so you're welcome. Masato, you mentioned, are we being more cautious? I mean, do you feel like, as Philipp said, maybe Japan is following in the footsteps, like Europe might be of the US, or do you feel like you're really kind of operating in a different state?
Yeah, I think it's very interesting, actually. If you look at the survey result, 6 to 68% of consumers reported higher restaurant prices in the US and Europe, while in Tokyo and France, that number was lower, 46% and 48% respectively, if I remember correctly. For Japan specifically, the difference I see is actually on in the behaviors of restaurants and retailers, that they tend to reduce the size or portion to keep the price the same instead of increasing the price. So actually, again, this is kind of related to what I explained before, that the companies restaurants or retailers are kind of afraid of losing. They don't want to give a message to consumers that they took price, they increased price. So instead of, they tend to reduce the size or portion and keep the price the same. So that's kind of like the behaviors that we are seeing in Japan, and that is very quite different than the retailers' restaurants in the U.S., for instance.
Francois mentioned shrinkflation early on. Masato, do your consumers, do consumers in Japan have that kind of negative reaction to shrinkflation, or are you seeing that at all?
I think that's a very negative. That people normally, I think people have not been noticing that so far, but I think this that we're under very unprecedented inflationary period, people are just very cautious about the size, portion, what they're getting, and what they're paying for. So it's definitely it's only online, but I've seen a couple like articles criticizing the downsizing, the size of portion shrinkflation. So in that sense, I think we're quite similar. I think we're going to follow the same reactions. Consumers going to follow the same reactions as consumers in the U.S.
Yeah, Francois, do you want to add more bad news?
No, I think it's really interesting what Masato was saying about Japan being in a deflationary environment for so long and having just a little bit of inflation changing consumer perception. So it really tells us that trade-off decisions, such as the ones that Philipp was talking about between discretionary spending, do I go to the restaurant or do I pay my utilities or do I go to the grocery store? All of this is very context specific, and perceptions are being changed by this inflationary environment. And I think it'll be interesting to see how it plays out across these markets for the restaurant industry. I think in the US, we're already seeing quite a bit of traffic pullback as a result of pricing. Europe might be following, and Japan might be a whole different story. But I think it just illustrates how those different consumer perceptions play out in those different markets.
Francois, can you tell us what you see as opportunities for operators as we go into the end of 22?
So I think in terms of opportunities, consumers still see restaurants as a special occasion, as a discretionary spending that they enjoy doing as getting together. So I don't think that's going away. There's also a necessity around using restaurants. It's nice to think that you could have all your meals at home, but that's not the reality. And I think there's still a lot of growth opportunities for restaurant when it comes to off-premise digital, as well as engaging consumers with loyalty programs and things like that. I think restaurant brands need to think creatively about these things and seize these opportunities that to me are still bright spots. The inflationary environment is what it is, but beyond that, there's still growth for the industry.
Yeah, we saw that actually in a different survey. I remember, Francois, where especially kind of the older generations, couponing was still working, kind of discounting.
Yeah, I think wanting money back to the consumer a little bit to entice them to increase their frequencies. So deals, discounts, providing a little bit more value, I think will be a big piece of the equation going forward to offset some of the inflationary costs that consumers are feeling, not just when going to restaurants, but across the economy.
Yeah. Masato, I know we talked a little bit about the marketing promotions. Do you want to comment on Japan's opportunities?
Yeah, it's kind of to piggyback on what Francois mentioned in the discounting. In Tokyo, even though the consumers tend to be more, a little bit more price sensitive, the flip side is that I feel that their consumers are more reactive to the promotions at the same time. So as we see COVID restrictions are being lifted further, including opening the border to welcome more inbound tourists into Japan, and more consumers are willing to eat out because the restrictions being lifted, I believe it increases the probability of being successful in Japan market if we construct very good pricing strategy together with effective marketing promotions. So that's like a pro side. It's not like all sad news. There's definitely a growth opportunity for the restaurants.
But also, I know in the U.S., Francois mentioned that the special occasion dining. Are you predicting that in the UK too, where it's like, we're celebrating someone's birthday or
stuff occasions like this? Exactly. So birthdays, special occasions like promotions, these sort of things, or just this one or two odd occasions where you actually get together with family and friends, because people living apart, these sort of things. I guess these occasions are going to be remaining. Then looking also on what Francois mentioned regarding couponing, I'm looking at it through a value perspective, and I think this more this occasion, the more impulse occasion, this more these occasions that are driven by a need of eating and convenience combined. So when we're specifically looking at QSR occasions, right, the lunch on the go, these sort of things, right? I think there will be QSR will profit from this current situation because there's trade down happening. But I also think that value is going to be a key traffic generator in the QSR segment, more than it's going to be driving more of a difference than in the full service segment, because of the different consumer mindset, per my prediction. So consumers will be looking for offers and will be making more price-based decisions in QSR. You don't lure consumers around with a voucher for a full-service restaurant if you expect a great experience. You will not get them once or twice more in order to offset that. I think full-service restaurants really need to work around their proposition. They need to work around how to differentiate themselves. They need to work around how to provide this extremely good service, so people are actually craving that occasion, whereas QSR, who are depending on this impulse, who are depending on the frequency, we will see value being the key differentiator or the key to success in that segment.
Yeah, I saw Masato and Francois. I saw both of you nodding. Do you have anything else to add?
I think it's a great point Philipp is making, and something to think about for restaurants is that type of occasion, right? How do you cater to that utilitarian occasion versus how do you cater to that hedonic experience, right? So no, I think it's right on.
Well, this has been fascinating. And I know I asked lots of questions that weren't even on the survey, but you guys are so knowledgeable. We really appreciate this global perspective, and I know our viewers will too. Viewers can actually read more and download all 7 international surveys at revenuemanaged.com. And RMS also shares monthly sales and traffic data on its website and the most up-to-date restaurant insights. And then remember to subscribe to our channel to get the latest edition of Revenue Stream. There's much more to come, including another round of international consumer surveys. So thank you.